Hi guys, welcome back to this platform called Traders Way where we talk about forex and how it goes in the financial market. So today I want to break down the simple strategy I use. Some traders still find it difficult to understand one strategy. People that are just entering into the market, they are finding it difficult to understand one strategy. They jump from one strategy to another after testing one strategy for maybe they had a losing trade with that strategy. They feel it's no longer working. They find it difficult to understand one simple strategy. Today I want to share you guys that simple strategy I use for myself, and it has already made other profitable traders profitable. Understand? It has changed their life. So this simple strategy I want to share it with you guys. I want you to stay to the end of this video. Also click the subscribe button below and follow for more content like this. So let's dive on to today's topic. Today's topic I want to teach you guys about SMC, smart money concepts. Or traders have been hearing about SMC. SMC. What is SMC? SMC is a simple strategy used by banks, hedge funds, big investors. Understand? This simple strategy helps us rotate traders to trade like banks, hedge funds. Except for us to use indicators to spot the direction of the market, this simple strategy helps us to use things like break of structure, liquidity sweep, order blocks, higher lows, higher highs, lower lows, lower highs to know the direction of the market. So I want to teach you guys how this simple strategy works. Very easy and understandable. Here is our chart. You see, first, what are the things you need to look at when using SST strategy? You can see it here already. First, we look for a change of character, a break of structure, a fair value gap, a liquidity sweep, and other block. Very simple strategy. You don't need to draw everywhere with lines on your chart before you know the direction of the market. First, how to know the direction of the market, I'm going to explain it to you. First, as a beginner trader, you don't know the strategy you are going to use and you want to use SMC strategy. Here is the first thing you need to do. Know the direction of the market from the higher time frame to help you be on the safer side. You can see I'm drawing my trend line so that I can know the direction of the market. I'm drawing my trend line so that I know the direction of the market. You see, so why I drew this trend line so that you guys understand the direction of the market properly. You can see I drew it from the top here to this level to show you that market have been falling, means market has been on a bearish trend for over months now, because this is on a weekly time frame. So for months, this is more than months, because it's, let me say, if they count all those candles, each of them is almost 3 years or 4 years something. You understand? So for years market have been on a downtrend. You see, market tap in here. You can see there was a first touch here, second touch here, and a third touch. This second touch made market to went straight down. Market went straight down and went up to hit the line again for the third time. The market came down. Instead for market to break this low, to break this structure to the downside, it went in and tapping this level, this trend line level, this support level, because this trend line is called the support level. Tapping this support level and went straight up to break this resistance level, which is this uptrend line. Break this resistance level. So that signifies that market is no longer on a downtrend. Market is now on the uptrend. That's the meaning of everything I just explained here. Market is no longer on a downtrend. So we should have it in mind that, so analyzing this chart, what you're looking for is a buying setup, no longer a selling setup on this trade. So after looking out for our market direction, then we'll go down to the daily time frame to spot. Let me see that I'll write up. Let me bring it here so that you guys, because we are going to use this thing very well to know what you are doing in the financial market. You can see, to look for your change of character, you see I've already draw everything very simple for you guys to understand. On a bearish trend, you can see here it was a bearish trend. What is market doing on a bearish trend? It's breaking structure to the downside. This is the break of structure. This is number two. You can see it on the number two. Breaking structure to the downside. Why? Because on a downtrend, market can't break structure to the upside. Instead, market is going to give us a high, a lower high. Let me write it down for you. Bearish trend, you see high, you see. So I just wrote everything down so that you guys understand. On a bearish trend, what are we looking at for on a bearish trend? Is a high, a lower high. Here was the high, this is the lower high. Market cannot go up to break this high. If market move up to break this high, that means we are no longer on a bullish trend, but we are no longer on a bearish trend, sorry, but still on a bullish trend. Understand? But once market form a lower high, breaking straight to the downside, giving us a lower low, you can see it here, a lower low. After creating a low, give us another lower low. That means market is still on a bearish trend. But any situation whereby instead for market to give us to continue that lower low, breaking structure to the downside, but instead market came and formed this low, went straight up, break this high, because what did I say earlier? Market cannot break this high on a bearish trend. Instead, to continue to create a more lower highs. But in the situation whereby market came in this low, it didn't come to sweep this low. Like after creating a low here, a lower high here, market supposed to come to break this low. But what the market went back up and broke this lower high. That means market has changed direction. It's now going upward. That high it broke, we SMC traders will mark it out as our change of character. You can see here, CHOCH is called change of character. You see, marking it out, we take it as our change of character because market has now changed direction. It's changing character, telling us that market is going to buy, it's no longer going to sell. You see, after change direction, then what would that bullish trend create now? To now create a low, a higher low. You see, this low is high, this low is higher than this one. This was the first low, this is the higher one. That's why we call it higher low. And this is another higher low, and this is another higher low. And guess what will bullish market do? Bullish market will break structure to the upside. You can see breaking structure to the upside. This is a break of structure to the upside, this is a break of structure to the upside, this is a break of structure to the upside. Very simple to know the direction of the market. You see, very understandable. You don't need to draw lines to fool your chart before you know the direction of the market. Then now we are looking for a buy sector, so let's go down to the 4-hour time frame to know how to spot. Wait, let me bring my okay, so that we know how to spot our market setup. You understand? So we are using this thing very well. We're not going to leave it, because this is the thing we are looking at in this strategy. Very simple strategy. So first thing, on the 4 hour time frame, you want to look for a buy stop, because we have already spot our change of character. We already have it in mind that market is buying. You can see what weekly time frame told us is the same thing daily time frame is telling us. So we are not wrong. The market direction is not wrong. You see, as a trader, I need to have it in mind to carry whatever the weekly time frame is telling you very serious. Forsake whatever the lower time frame is telling you. Bear it in mind that whatever the higher time frame is telling you is actually what is going on in the market. Anything lower time frame is telling you, just to fake out all these premature traders. Yeah, because if you are matured enough, you are going to respect the higher time frame, because the higher time frame is the overall time frame of every other time frames. So why I choose there my order block, you can see, let me bring this thing here. Order block is the last one. Break of structure, we have already looked for our change of character, which is very very down. If you go to the daily time frame, you get to see it. Order block, now break of structure, now you are looking for order block. Why I choose this order block, you can see the reason why I choose this order block is because of my confirmation. Which confirmation is that? Fair value gap, which is the number 3. Fair value gap is my confirmation for this order block. Fair value gap is my confirmation for this order block. You can see very well. Let me use, you can see fair value gap started from here. You can see the gap. You can see the gap. The gap inside these two. You can see the gap. You understand? That's my fair value gap. You can't see it very well if you not zoom in. Let me zoom in for you guys. You can see the gap. Very simple and short gap. That's my fair value gap in this trade. That's why I choose this as my order block. Understand? So I'm going to delete it, because it's not really, the other block is not really showing very well. But I know if we continue, I'm going to show you guys another example. I just want to break everything down so that you guys will understand where we are going using this strategy. You see, so after spotting my order block, you can see we are not wrong. You can see we are not wrong with the confirmation, because market came in after spotting my order block and my fair value gap. The next thing we are going to spot is liquidity sweep. Very 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 much important. Very much important. Why? Because this liquidity sweep, this is where some traders are being trapped. They don't know where is liquidity and where is no liquidity. They just enter because they just see that, oh, this look like a support level, market is going to tap in and go up, and they get stopped at later. They don't know that place is not looking like a support level but a liquidity. You see, so this is why hedge funds, banks use this strategy, because this strategy makes them to spot liquidity. Liquidity is the main thing in this market. The strategy makes them to spot liquidity where they are not going to be stopped out. Understand? Because where others think is support level, that's where they see as liquidity, and they are those traders that take care of their support level, hedge funds and banks, they are going to see here as where to like set their entry. You see, where to set their entry and their stop loss below. But support trend line trader, they will see here as where to set their stop loss and the entry above. You see, later they will still get stopped out. So you as a trader need to understand how to spot your liquidity level very well. How to spot your liquidity level very well. Sorry, I guess it was network. So you can see we are right. Market came in, tap us in. and gave us, let me check the ratio. Very simple strategy. You can see market gave us the pips. Let me check the pips. It was 452 pips. Very simple strategy. You don't need to draw or scatter your chart with lines and everything. You see, after spotting out all this confirmation, you see market came in, tap us in and went straight up. Now let's look for another example. You can see we are now waiting for another flow here, because here is another example, a clear example that yes, market is going to come in. You understand? Market is going to come in to tap us in. You understand? We are looking for another. If you watch, we have already like market, but since market has not reached that place already, so let's look for another one up here, because from here you can see that market have been going down. To reach this level, then go up. So we are going to analyze this together, because I've already break down everything from the higher time frame. So what are we spotting first in this market? Break of structure. We're spotting the change of character. After spotting change of character, why? Because this was the high that was created. Let me carry this thing up here so that you guys will see it very well, because we are still using these things. So this was the high that was created. On a bearish movement. What do we say? We have a high, a lower high, another lower high, another lower high. You see, we have a low, a lower low. Market will break structure to the downside. You can see I've already marked out everything. Market give us a change of character. You see, market give us a change of character. Market give us a break of structure, BOS. Market give us a break of structure. You see, so market is going to break structure to the downside. Then you are going to look for a selling opportunity. Just to respect this 4-hour time frame, look for a selling opportunity. But you have not still moved it out from our mind that the higher time frame is telling us buying. Like we still are still on. So here is our other block that we have already kept. It's still fresh, so we are waiting for market to reach that place, because rules of the market is allow market to come to you, don't rush. So we are just analyzing what is happening now before our setup will play out later. So after looking for a break of structure, change of pattern, break of structure, then the next thing is look for a other block. You can see I choose there my other block. Why I choose there my other block, I've already explained it on the former one. Let me go to the 3 hours time frame so that you're going to see why I choose their mother block. You can see very well I choose their mother block because of there was a fair value gap here. You can see very big fair value gap, Okay, let me use this candle, let me use this triangle too. You can see this fair value gap, it was a big one. Let me change the color. I guess network is disturbing. You can see the fair value gap, very big one. It's a huge fair value gap. So why I choose there, because of my fair value gap showing very clearly, and my liquidity level, which is my sweep of liquidity. You can see it's called inducements. For people that are trading SMC, this sweep of liquidity is called inducement in the market. Okay, so market came in, sweep this liquidity, tapped me in, and went down to break this structure. Broke the structure to the downside. Very simple strategy. We can see another example again. I spot here my, you see, I spot here my um other block, and guess what? Why I spot them on that block? Because of this fair value gap here, in here, and here was my sweep of liquidity. It's very simple. You see that market has been respecting everything. You see that everything is just playing at the same thing. Like the same thing you apply here, the same thing you apply here, the same thing. But if you analyze this thing from up to down here, you're going to see that market have been playing at the same way. Understand? Guess what? Market went up, tap us in, straight down, and broke this structure to the downside. It broke structure to the downside, making it clear that this strategy is really working. Market broke structure to the downside. You can see it broke structure to the downside. Then after tapping us in, it broke structure to the downside. You see, so this is a simple strategy that every trader find it very simple. You see, it's not difficult, there's no magic, it's not hard, just simple like this. You can use it on any chart at all. You can see you're using it on pounds. If I turn on to euro, but I don't want to make this videos too lengthy for you guys to watch, but you can use it. You just need to practice it. You see, I broke it down on how to look for the trend of the market first, how to spot the higher highs and higher lows, lower highs and lower lows, how to look for your change of character, your break of structure, because I said earlier that bearish market breaks structure to the downside. The bullish market breaks structure to the upside. Understand? So all those things, if you pen down all those things and you follow them accordingly to what I said, you are going to find it very easy and understandable that this strategy is very simple. It's being used by hedge funds and banks. Imagine this strategy is being used by hedge funds and banks. That is very profitable. Understand? And the risk reward ratio, some traders, they are too greedy to, like, they want to pack everything in the market. This strategy is not 100% winning rate, but I can assure you it's 50% winning rate, and the risk reward ratio is just a small thing. Understand? Risk reward ratio is 1:3, 1:4. You need to have it in mind. Risk reward ratio is 1:3, 1:4, 1:2. You shouldn't be looking for 1:10 on this strategy. Understand? So this is a simple strategy. You can see, if we analyze further, you are going to see that market had been respecting everything we say they are. You see, okay, let's go to this is the 1 hour time frame. We are going to analyze it again. So uh, after going down to the 1 hour time frame to know what is happening in the market, you can see I spotted another other block here. You see why I spotted that other block? Why I spotted that other block? Because of my fair value gap. You can see the fair value gap inside here. You can see the fair value gap inside of here. Market came in, tapping that fair value gap and went straight down. You see, look at it here very well. You're going to see it. Market came in, tapping that fair value gap, went straight down, giving us, see, here was our inducement. You can see the inducement is here already, which is the liquidity sweep. Market came down to break this low. Very simple, to break this low. Okay, market came down to break this low. After coming down to break this low to the downside, giving us a lower low, we waited for days and weeks to look for another one again. You can see continue the same thing, because if you go down to the 2 hours time frame, you are going to see that why I choose them or that blow, because of this fair value gap here, my liquidity here. You can see my liquidity here, my break of structure here. Even though you don't see this break of structure, but you see this particular one here. is showing very clear. You see my break of structure here, my inducement here, fair value gap, other block flow, and you see market came in, tap in, and guess what, market is coming down to show you that this strategy really works. It's not magic, understand, very simple strategy. I've been using it, that's why I've been using it. So I want you guys to watch this video. If you can save it anywhere on your phone, save it, go through it once again, keep on going through it. You pen down, because a good trader is trader that pen down things, then later, because your head is not that big enough for you to carry everything. If you think you can carry everything with just one watch of the video, no, you pen down things so that you can come back another day to read what you pen down. If you make mistake on something, you can go back to it and check it. Where am I going wrong? Okay, this is the place I went wrong. You correct yourself. You see, before you know now, the strategy will be part of it. The strategy will be part of it. So I want you to click on the subscribe button once again. I want you to support this platform. Make this platform reach out to more people so that people can watch and understand, enjoy the benefit of that knowledge you are getting for free also. So like and share, comment your comment your own opinion, what you understood in this video,